Good evening, everyone, and thank you for being here. I know it's late and it's dinner time. My name is Grace Chan. I'm a realtor. Over the past year, we began hearing the same question over and over again with purchasers in Toronto. I brought pre-construction. What happens when I can't close? These are not reckless purchases. These are thoughtful, responsible people who purchased at a very different time, in a very different market, with different interest rates, lending conditions, and expectations. Now, it became very clear that we're not isolated in this situation. This is essentially affecting every single person in the city, whether it's maybe not directly you, but it might be a friend of a friend, or a family. And rather than speculating or offering opinions, we felt that it was important to bring together professionals from different sides of our industry: legal, mortgage, and real estate, to provide clarity, practical guidance, and options. This seminar was created simply because people needed real answers, not noise, not fear from what you may see in the media, and more importantly, not judgment. Our goal tonight is not to tell you what you should do, but because every situation is different, and we are here to help you understand what is actually happening, what your options may be, and how to move forward with clarity. So as I said before, my name is Grace Chan from the Mr. Yorkville Real Estate Group here at Forest Hill Real Estate. I've worked in real estate and new development for nearly 2 decades, advising and marketing on pre-construction projects in New York, Vancouver, and Toronto. And I was really compelled to start this discussion because I felt it was a responsibility of mine, given that we are seeing the market today. And I'm so very grateful to be joined by these 3 exceptional professionals who bring deep expertise and real-world experience to this conversation. David Feld, founding partner here at Field Calia Corporation, is a highly respected real estate lawyer with extensive experience in pre-construction transactions, closings, and complex situations when deals don't go as planned. You have to check out his TikTok and his Instagram because it is actually very, very informative, and you will find some real good advice there. Forrest Todd, Vice President of Mortgage Financing at Fern Capital. Now, don't let his youthful face fool you, but he brings nearly 3 decades of experience in mortgage underwriting and financing, including working directly with distressed situations and lender decision making. He also works with law developers, so you'll get a really interesting perspective from him. And Nissan Michael, aka Mr. Yorkville, and a real estate broker at Forest Hill Real Estate. Now, he is a trusted advisor in Toronto's luxury market for over 20 years, who has guided clients through multiple real estate cycles and challenging conditions. My role this evening, along with Alexandra, who you don't see, she's in the back over there, okay, is to simply guide the discussion and ask questions many people are afraid to ask, and to ensure that we cover the issues that matter the most to you. So raise your hand in the chat, you can do a little chat button, and feel free to type any questions that you may have. There will be a replay that we will send to you. So we will begin with a structured conversation addressing the most common questions that we are hearing, and we will open the floor to you afterwards if you have any questions. Now, if your situation feels a little overwhelming right now, you're not alone. And tonight is about helping you move with certainty towards understanding. Thank you again for trusting us. Let's begin. David Feld.
Hi everybody, my name's David Feld. I'm a real estate lawyer. And for the last 20, 25 years, every deal in my office was closing. Every single deal. Like, if somebody couldn't close, they'd find a loan from their mom or their dog at some point. Like, it's just been crazy. But everybody found a way to close, and mostly because property was always going up in value, right? And so if you found a way to close, you could immediately get back out of it 6 months later, a year later if you needed to. There was always a way because the value kept going up. But in the last year, 2 years even, but in the last years, like last 365 days, let's say, things are getting a little bit different, let's just say, to be nice. And people, a lot of people, and I'm going to give you a percentage around, as we discussed earlier, maybe 15 to 20% of people in most buildings, let's say in Toronto, it's not closing. We're seeing that they're not closing. So if you're in that boat, or you know someone who's in that boat, I'm in that boat too myself on some units. Like I buy and sell a lot of units myself, and I got myself into it as well. And people call me smart, like I'm pretty smart, right? So as you were saying, like all of us were pretty smart when we entered into this contract a few years ago, when we thought, oh, I'm gonna get into either to live or to assign at a profit. We were all pretty smart at that time. Maybe we couldn't have foreseen some of the things that have happened. A lot has happened, okay? Nowadays, and just to give you a sense, like you signed, just so you know, when you did sign these agreements, a 40 or 50 page agreement. It's a one-sided agreement, and it is drafted against you, like you gotta close. So we're gonna get into it a little bit later, but I just wanna tell you. Now I have clients calling me every day, and I wanna tell you, it's about 1 to 2 per day now that I receive. New clients out of the blue, they can't close, they heard about me, and we discussed some of the things we're gonna discuss today, okay? I have clients who've lost their job, they lost their wife, they lost their girlfriend, they lost their wife and their girlfriend, they lost their family members, you name it. It's unbelievable the things that I hear every day. Disease, like it's just so much. And usually it's because it's been 1, 2, 3, 4 years since they signed. Now with lots of the extensions and builder, construction delays, another year. So it's like 5, 6 years sometimes, and people's lives have changed so much. And there's a problem, okay? Other problems that we see are people lose, like if they lose their job, they can't afford to close, or the value that the lender appraises at is too low, and they have to come up with extra money. And a lot of those times, people will go to the bank of mom and dad, or cousins and sisters and stuff like that. They get it, but not everybody has that. Okay, so we're starting to see a lot of that. Now, I'm going to just give you an example. Like, when you don't close on time, you get a default letter from the builder. Okay, everyone gets it. And there's many different law firms in all across Ontario, but in general, the default letter just says, when you didn't close, we're going to keep your deposits, and we're going to give you some time. And in general, they'll give you some time, let's say 30 days, 60 days, they put some date, and they say, if you don't close on that date, we're going to talk more, but we're giving you until that date. And maybe there's a small fee to close on that date. And if I'm lucky, some of my clients find a way to close in 30, 60 days. Maybe they figure something out. But if I'm not lucky, if you're not lucky, then on that day, they say, oh, you didn't close, you're in default, we're keeping your deposits forever. And now we're going to relist the property to mitigate our damages, meaning we have a duty to keep moving. So we're going to try and find a buyer for the property. They find a buyer for the property, and then they say we have the right to sue you for the difference, okay? They can sue you for the difference between what you were going to pay and what they sold it for, okay? Plus other stuff. Now I just want to say, they don't just sue you for the difference, they can sue you for carrying costs, because maybe they had to carry the property for 6 months or a year, interests on their loans, which are quite high. Then they have taxes, insurance, realtor fees, they pay a realtor to find a buyer for them. All those things can be tacked on to this lawsuit that they talk about, okay? And so it gets stressful right away for people, very stressful, okay? So some of the questions people ask, and I'll address some of them right now, and then we can take many questions and look at any questions you have. But what can I do? Like, what is my possibility before default, first of all? What can I do before default? Like, I don't want a default. I want a way out. Is there any way out? So I'm going to talk about 3, 4, or 5 things that you could do. The first thing you'd want to do or try to do is an assignment. An assignment is when you have your agreement and you sell it to someone else. Instead of defaulting, you could sell it to someone else. Now, in the olden days, people, as you mentioned at the very beginning, made all their money in assignments. And I too, I jumped on the bandwagon. I made a lot of money in assignments. I bought and sold property all the time. It helped pay for the shirt and stuff like that, right? And basically, but now, and I used to get so many assignments per day through my office. I would get 1, 2, 3 per day through the office. Now I'm getting almost 0 per week of assignments. So there's no one really out there to buy an assignment at a higher price. That's not happening. But assignments at a loss, that's happening. So let's say you have an $800,000 unit, you can't close on it. If you find someone to buy it from you for $750, then yes, you lose $150. but you get rid of the ability for the builder to sue you. It's over. You can write it off. You talk to your accountant, maybe write off the loss against your income, and there's a loss that you can be proud of. There's a loss not that you can be proud of, but there's a loss that you can understand. Versus this hovering feeling that you might get sued. Because a builder has 2 years to sue from the date, the statute of limitation is 2 years. So a builder has 2 years to sue you after their loss, after the closing date. So you could be like a year and a half out and you see a lawsuit 2 years later as a surprise. If you want to avoid that, one thing to try and do is an assignment. Builders are allowing assignments all the time now. It would be crazy for them not to allow it because that's one way of mitigating their losses. Like you say to the builder, look, yes, I'm supposed to pay 100. I found someone to buy it for 600. Please accept this, builder. And any builder should say yes to that because, and they do, because they at least, by the way, the builder gets their full amount, right? You get that, okay, because the loss is paid by the seller.
Do they typically have an assignment fee?
Yeah, fees are range from $0 up to, for condos anyway, around $5,000. When you get into houses, it can go $10,000, $25,000, but we're talking about condos more. And yeah, there's a fee, but honestly, a $2,000, $4,000 fee at that point is fine.
Yeah.
Like I accept.
Yeah, peace of mind.
Yeah, peace of mind is so good. So the first thing I just wanted to address was assignments. Assignments are a way for you to really mitigate your losses as the purchaser. Find someone. It's hard to do, and you have to have a really good realtor, working with you to help you find a buyer, and they have to have they have to know what they're doing. So that's what I wanted to discuss about assignments. I call those assignments at a loss. It's very rare to break even or gain any kind of profit now. Okay, next up, trying to negotiate a price reduction. Now, a lot of these things I'm going to tell you sound hard and impossible, and they are next to impossible. They are hard, but I'm going to end by saying you want to get a good lawyer who kind of knows the ins and outs of every builder, every lawyer, and everything to try and help you. But can you negotiate a price reduction? I mean, there's a good argument for a price reduction, right? The value's gone down. My mortgage company has assessed the property, appraised the property too low. There's a difference of $100,000 I need, and I can't come up with it. And then it's like, hey, builder, there's 20% not closing. Don't you want to close something? There are arguments to be made to the builder, and builders today are getting a little more listening. They're listening a little more because it's getting uglier for them too, right? More and more people per day are calling, their lawyers calling them, yeah, they didn't close. No, that purchaser didn't close either. No, that purchaser didn't close either. So the builder's like, holy, I should close some things.
Yeah.
So everything I'm telling you, I've had luck doing. I'm not saying with every client, but everything I'm telling you, I've had some luck doing. So,
and if you don't mind me to interject,
of course.
the one thing I realized through 22 years of practice, especially when it comes to litigation, is that honey sticks more than salt. If you can have a relationship with the opposition, if you can sit down and come to some middle ground, you're always going to do better rather than jumping into a litigation and adversary, right out the gate.
Completely agree, and that's why I like to act in good faith. I always start all of my negotiations with the other law firm in very good faith. We say, look, you guys have been, we've been great. We've been acting in good faith. All our deposits have been done on time, and you've been acting great. That's great. Let's find a way to work together. Let's find a way to get this over the finish line. Let's find a way to get more money in your pocket, Mr. Builder. That's kind of how I say it. I go, either you're gonna have no money because they can't close, or I want to give you another $500,000. How does that sound? And you want to sort of sell it in a cool way, right? It's very important. And again, how far you get depends on the lawyer on the other side and the builder on the other side, and etc. Okay, so that's called a negotiated price reduction. Another one that I've had some success with is called a mutual release with payment. So I just want to explain. First of all, what's a mutual release? That's what you dream of, okay? I have a lot of clients calling me they're like, hey, can you give me a mutual release? I don't want to close anymore. And I'm like, sure. No, I can't. I can't get you a mutual release just like that. If you write to a builder and say, look, I can't close, send me a release, I'll sign it, give us back our deposits, every builder will laugh. They're like, ha ha ha, that's a funny joke. You do yuck yucks. It's not going to happen, right? You can't get a release these days from any builder with any story, and I've tried every story and I've tried all. Yeah. But you can, and I have, offer more money to the builder. It's like, hey builder, I know you have $100,000 money. Can I offer you, and I'm going to give you real numbers, something between 20,000 and 180,000, depending on the purchase price. Can I offer you 20,000 for a mutual release and you keep my deposits? And yes, I've had success with some of those, okay? Or we've negotiated a number. And that's up to the client. If you have a number in your mind, you're like, I just want to get out of this, I don't want to get sued, I don't want that, I can do 20,000, I could do 30, like, talk to us, we'll try to help you out. And we get real mutual releases signed. I did one this week. Clients so happy, even though they paid another 20,000, they were ecstatic, said best experience of their life. I'm like, great, thanks. Okay. This next one is called the unicorn, okay? It's very rare for me to be successful with this, however, I've had some success. And that's when you say to the builder, listen, builder, I can't close, I'm sorry, but this deposit I gave you, let's move it to another unit that you can't sell. And let's buy that unit at, not the market value from back then, today's market value. You tell me what that unit is worth today, and I can see because they're advertising it. So you say it's worth this today, this other unit. Let's move my deposit from this crappy one I can't close on to this amazing one that you're selling right now at today's fair market value. And let's sign any releases you need to make that happen. And let's keep that confidential. Let's sign a non-disclosure agreement and not tell anyone about it. Okay, builder? So that's the best one. I call that the unicorn. And yes, I've had some success with those as well. Quietly moving deposits to another unit at fair market value. People are like praying to me when I do that one for them, okay? It's very rare. If you're gonna all call me after this and expect that I'm gonna try for you, I can't guarantee that, okay? It's very hard to get, but I get it for some clients. So that's the best, is a confidential unit swap. That's what I call that one, okay? Another one is close and wait. If you have the money and you feel like you can close it, but you don't want to close it, because I have a lot of clients like that too. They're like, yeah, I got the money. Yeah, I got 20 units coming up. I got the money. I just don't want to close it. It's garbage. Like, why would I want to close right now? The values come down. If you believe, and we'll come up with some reasons in a minute, if you believe that the market's going to pick up, which we kind of have to believe that, because as we were saying just before, everything in life is cyclical. Everything. There's nothing that's not cyclical. So let's hope and pray that this is cyclical too, and we're on the down spiral. I don't know how much more down it will go, but it's got to come up at some point. So let's say you close, you ride the down spiral, and you come back up. Let's say we come back up in the next year or two, okay? Let's hope and pray all together and to all our various gods. Let's hope and pray that the market comes up. If it does, and you hold it, then maybe you're going to come through this. So maybe on the other side of this, maybe a year or two from now, you could sell and have actually made some money or break even and not have these losses. Because if you make the decision to not close because you just don't feel like it, there are some consequences that come up, and I'm going to talk about those very soon. But I'll stop for a second and ask if anyone has any comments or questions.
I have a question. Say, for example, you have a client who has purchased pre-construction and cannot close. Builder hires counsel, sues your client. The first part of my question is, how long does it take to receive a statement of claim, for you to then put together a statement of defense? And are there any scenarios where their judgment proof, if, say, they don't own assets, say they're self-employed, what are the consequences of being in default? Will it affect their credit rating? Can you garnish their wages? But again, if they're self-employed, maybe you can't garnish their wages. Are there clients out there, are there purchasers out there that really can get away with it?
It's a tough one, and it's funny you mentioned that. I actually share that information in my request to the builder about that person's specific situation, because in some cases they have nothing. And I tell the builder, I'm like, Sunim's not going to get you anywhere.
Right.
But they're not judgment proof, because if the builder decides to do a lawsuit, and I don't mean to scare you guys, but this week alone I've been getting more statements of claim coming through. And I don't do litigation, by the way. I refer that out. I'm just helping you up until litigation. I have a great litigation lawyer that I speak to. I spoke to him today as well to get updates for you guys. But basically, up until litigation is what I do. And they are sending statements of claim there. And the reason why is it's really easy to write this statement of claim. You could hire a lawyer and have them draft one of them. You could literally pop names on it.
Sure.
And the statement of claim, and I'm sorry to say it, guys, is pretty simple at the beginning. It just says, you signed an agreement on this date to pay this much.
Yeah.
This date has gone by. You only pay this much, so you owe this much, which is simple math. And that's the statement of claim right now. It doesn't even talk about their mitigation. It doesn't even talk about how much they sold it for. They literally try that. And then you could go back and argue, well, did you mitigate? Yes. Did you sell it? Yes. How much? And you could offset it. But the statements of claim that are coming in, and by the way, they're claims coming in, but they're not filed yet. These claims are just, they're like, if you don't pay on this date, we've already drafted the claim. Please see attached.
Yeah, and it's the Ontario Superior Court. It's not in
Not small claims. No, it's Ontario
because
Superior.
I mean, I guess in a scenario where maybe it's a $200,000 condo, like a tiny deal.
Yeah.
Maybe they would use small claims.
Exactly.
If there was a substantial deposit and there's not a large loss, a substantial loss.
So speaking about that, in general, people have deposited approximately 15% when we get to occupancy. Not 20 yet, usually 15. So if the price went down 15%, you might say the builder will decide not to sue because they lost 15, they gave 15, they sell it at today's fair market value, they keep that 15. Why sue? Like there's no damages. You can only sue if there are damages, by the way. You don't just sue people. Like, if you can sue anybody you want, but if you sue and you win, then you look at damages. What are the damages? If there's no damages, you don't get anything.
Right.
So there's no point suing in the first
Right.
damages. Okay?
Right. And they have 2 years, so they can wait. They can wait it out.
They could wait and see where things go and sue later.
And then
So
sue once they get close to the limitation
you
period.
got it. And that's when they'll have a better sense of their actual damages. And, you know, so when people say, oh, I think I won't close, and there's one guy on TikTok advising, like, just don't close, and
Yeah.
people keep sending me his video, and I'm like,
Yeah.
that's terrible advice, that's
Yeah.
not a lawyer, that guy is getting a lot of views for that, but that's not appropriate, because if you advise someone just don't close, they might get sued, right?
Right.
Also, I look at approximate additional amounts that builders add to their lawsuits for things like the commission, the property taxes, their legal fees, their maintenance fees, their cleaning fees, all that stuff, and it hits about $50,000 on top of the damages. So they can try to sue you for an additional $50,000 on top of the difference.
And then plus costs.
Those are the
Yeah.
costs I'm talking about, like around 50. Oh yeah, plus costs in court,
Legal costs.
whatever the costs are in court, right?
Litigation.
So that could be a lot more. So
Yeah.
you want to avoid court at all costs if possible, and you want to try, in my opinion, to make some deal and get your way through it, because at least you could sleep at night knowing that there's nothing looming over your head. Okay, because I have a lot of clients. There's always stuff looming over their head. They're pretty scared every day, and they call me. Like that's how I know. They call me once a month.
Yeah.
Anything coming on my file? No. Okay, good,
That's
good,
good.
good. Right? You asked how soon. Now that's the other thing. Like, how soon do they sue? It's funny. I reached out to a few of my litigator friends to find out, and some are suing right away now. So some sue within 30 days.
Wow.
And others don't sue at all. I mostly, I would say 95% of the people that default with me are not getting sued yet.
Mm-hmm.
And so they're nervous and they're wondering what to do and they're trying different things. And a lot of them default and they cannot close, but some are making some of these deals that I'm talking about. Some of them are
Right.
trying. So my job as a real estate lawyer is to act for you in your best interest. So what I do is I talk to each client individually. I look at their specific situation, look at their specific numbers, and we draft something for them to the builder's lawyer, and we try it. There's no guarantee ever though, but you know sometimes it falls on deaf ears, and sometimes it's a beautiful reply. Well, it's never too beautiful in these defaulting cases, but beautiful in the grand scheme of things. Yeah.
One other comment, and I'm going to turn it to Ferris because I mean, this is really directed for your expertise. Say a purchaser decides to hold his or her nose and say, I'm going to do this anyway. I don't want to close, but I'm going to go and even if I have to go to a private lender. The good news is that if a condo is in the right neighborhood, they might be in a position to lease out that condo as an investment property for several years, and then put it onto the market, when the market picks up again. And they would come to you in that scenario.
Yeah, they would. from a financing perspective, there's really obviously your best option is always to get your financing from a bank. There's kind of a hierarchy. It's a bank, trust companies, credit unions, and then you get into the quasi, like the popular thing, the MIC right now. There's some publicly traded, some privately traded, and then you get into the private, real, like just individuals lending money. And each tier kind of has its own pricing. So we were discussing earlier, some banks are have a very good attitude in that they're looking at the purchase price and they're financing their normal percentage against that purchase price. Conventional financing usually runs 75 to 80%. And so if you have that bank, then you're okay. Some of the other banks, and there aren't that many banks in Canada compared to the US, other banks are just saying, no, I'm lending strictly on what the current value is. And that's where the problem, if you want to close, that's where the problem might occur that causes you not to be able to close, because you can't make the difference up. If your condo is a $1 million condo, and you put by the time you do occupancy, you put your 20% down, so you have $200,000 down, which means now you have to come up with $800,000. The $800,000, unfortunately, if the lender that you're going to is basing it on today's value, and so that condo is now worth $750,000.
You're upside down.
You're only going to get somewhere between $560,000 and $600,000 of your financing, and you have a $200,000 to $250,000 gap, like to get to the $800,000.
Yeah.
So what some developers are doing, that if they're able to, from a financial standpoint, they are offering vendor take-back mortgages, which fills the gap between what the bank will give you and what your deposit is. And what that basically can do is buy you time to allow the market to come back, whether that be, nobody has a crystal ball, but whether it's 2 years or 3 years, whatever it is, then they're usually offering the VTB, they're called VTB, vendor take-back mortgage. They're offering the VTB that decent rates.
Oh, really?
Because they want the purchaser to close.
Yeah.
So the VTB, over time, if the market improves, you'll be able to go back to a bank, and the bank will say, okay, now the value is back to $1 million. I'll give you your $800,000, and the VTB gets back.
Is the VTB in first position?
No, the VTB is the second mortgage.
Second, so
the bank's done. Let's say the bank gives you $600,000.
Okay.
The VTBs would be for $200,000, and then the other $200,000 was your deposit. So, but that's not every developer. It depends on their financial situation.
Yeah, and every bank. So vendor take-back mortgage is another option, and we can ask that as well. Hey, listen, we can come up with this much. Can you finish the rest off, Mr. Builder, and give a vendor take-back mortgage? If they say yes, which is rare but possible, you then have to get consent from the first lender. Because the first lender usually says, no second mortgages, sign here and here. Sign here to say you will not get a second mortgage. Yeah. I swear I will not get a second mortgage. Yeah. But I need a second mortgage. Can I have it? So you have to get exceptions from banks. Mm-hmm. And banks might give you that exception if there's value there for that.
That's why it's good to have the different tiers of lenders, because if you go if the bank says no, then you can go to your trust company, and the trust company pricing will be a little bit more expensive than a bank, but it would be cheaper than a private. Yeah. And the trust companies and credit unions tend to be a little bit more flexible and especially in this instance, in the current environment, there may be a bit more flexibility. Yeah. But there's the financing, you just have to be very wary. If you want to close and you have to go the private route, the issue is that it can be expensive, and the timeline for when the market recovers and where you can go back to your conventional financing, no one knows when that will be. So that those costs can add up. So it's a tricky situation. You have to balance what your cash flow is, what your ability to make your payments are, and all the different factors, whether or not you could terminate your deal with the many different offers that David talked about. You have to assess every situation separately, and unfortunately there's no magical solution for any, like there's no blanket solution that's going to fix everybody's problems. It just, you have to try every avenue, look at every different method. The first thing that you should do, if you haven't gone to your lawyer yet, and you have to review your agreement of purchase and sale, over the last however many years, it has come along. There's been a long timeline now between when you have bought your unit and when the building actually closes. And as David will tell you, every agreement of purchase and sale has an outside closing date. So the first date that you should check in your agreement of purchase and sale is in the carry-on portion of your form of your agreement of purchase and sale. That has the date the builder must deliver the unit to you by. So they have a approximate closing date, forget that one. Look, just go to the absolute outside closing date. Look, that date has come and gone. When that date happens, I believe it's 30 or 35 days.
Yeah.
You have 30 days to notify your builder that you want out, and you can get out with no penalty, and they actually have to give you a little bit of compensation and interest.
Yeah.
So that's the ideal situation. It's not going to be it's not going to be in every case, but maybe 10% of cases.
I hope, yeah. And we do a full, that's a great question. We do a full analysis. So even before we have that first meeting with our client, we analyze the whole agreement, including outside closing dates, any way to get them out
Yeah.
before we even get into that.
I was just saying for people that haven't gone to their lawyer yet, that are they're just worried right now.
Yeah.
First thing you do is go look at your agreement of purchase and sale and find that date. Because if that date is coming up and you have it in the building, you know they're not going to hit that date.
That's good news.
That's
yeah.
very good news.
Yeah.
It's very good news.
And we can help you with that too.
Yeah.
Very important.
Have you seen any scenario where a builder will amend the APS and change the price? So say you purchased at $1 million, they bring it down to 800, maybe do an IOU on the back end.
Well, that's what a BTB is.
But without calling it a BTB,
Oh, okay.
Yeah.
so that the actual agreement of purchase and sale is now a different.
I have infrequently, after much begging and pleading and really, hopefully some good lawyering, gotten them to reduce some prices here and there. But I don't want people to get mega excited that I can achieve that, but I have.
Because and you've read it, I'm sure if you follow the real estate sector especially in the city, you'll see that a lot of builders and developers over the last 5 years, when costs were running out, they had no problem basically holding it over the buyer's head saying, you have to increase your price or we're going to terminate our project. Unfortunately, it's not going the other way,
Yeah.
where now that the prices have dropped, they're not
Right.
they're not filling the gap with a price reduction. So it is, it's always something you can ask.
Yeah.
And if the developer is in the right situation, maybe they can be amenable to it.
Right.
But they probably won't be amenable to that until, if you have a 400 unit project, until they only have a few units left, because they don't want the 300 people
Right.
that are closing
Right.
first to find out that
Right.
there's been a price reduction,
Yeah.
and it can snowball.
Sure.
So it's all timing is, if you can't close and you can't find a way out and the builder's not willing to work with you, if you can find a way to kind of extend and be one of those last people, then you tend to we have one project that we're financing right now. We're looking at financing, and there's X number of units, and there's 10% of those people at the end that they're extended. They're basically kicking the can down the road,
Yeah.
hoping that once all the other sales close, the people that are just willing to close and can close, and everything's done, and the dust settles, and then there's these 10% of units that are left, they're hoping to go back and say, you know what, I want to close, you want me to close, let's find some sort of middle ground. Again, it all depends on the builder, depends on their financial standing, where they are. Because sometimes if they're highly leveraged with a lot of debt, the decision's not in their hands.
Yeah.
But if they have paid off their construction loan with those earlier closings, then they have a little bit more flexibility to say, okay, I get it, you want to close, I want to close. That's where you might get the price reduction or favorable terms or whatever it is.
Can you speak more to the rates that you're seeing, banks versus private lenders? What are we?
Well,
what would be
banks
the
right
difference?
now, a very good client, you're somewhere, it changes daily, weekly, whatever. You're
Awesome.
somewhere in the 3.9 to sub 4% for a good client.
For a 5-year term.
3 years, 5 years, maybe 10 basis points, like maybe four,
Okay.
something like that, for a fixed. Then the variable, because the banks are anticipating that maybe in the next year rates are going to go up, they're offering kind of favorable terms on the variable, but you have to be very wary of that because they're projecting rates going up because that's what the government's kind of talked about. So if you go in and get a variable rate that is 0.1% cheaper than a fixed rate, in a year from now, if the rate goes up 25 basis points or a quarter of a point, now you should have taken the fixed. So I think in today's environment, my advice would be take like the fixed. There's not a big enough difference
Yeah.
for you to want to go to variable. So the fixed rate right now, let's say, would be 3.9%.
For a
If
bank,
from a bank, from the 5 big banks here, CIBC,
Yeah.
TDs,
Yeah.
and RBC.
BMO.
Then, yeah, BMO. Then you go to your trust companies and credit unions. I don't want to misspeak. I don't know their current rates as well as I know the banks, but it's going to be somewhere a little bit more expensive, maybe 1% more, maybe 1.5%. So maybe in the 5% range, 5.5%, depending again on the length of term.
Right.
And then once you get past that and you don't qualify, then you're probably looking 6.5% and up, depending on your risk profile. As you know, the lenders
Right.
will look at how much, what's the default risk of you being able to make this payment all the time.
And how long are those clients locking in for?
Usually on private,
Yeah.
it's usually shorter term.
Short, okay.
But on a lot of times on the private, there's no amortization in your payment. So it's only interest only. So your payment amount, the actual dollar amount, is not as much of a difference between the banks and the credit unions
Right.
because they have principal built into the payment. However, the problem with that is you're not paying down your mortgage over time.
Yeah.
So
But
there's
it's short term.
But if
not
it's
such a
short term
problem.
and that's your solution,
Yeah.
it can be a decent solution. It can be cost effective.
Yeah.
But like I said earlier, you have to be wary of how much the cost can add up over that time. If it's 2 years, if it's 3 years for the market to come back, or for you to be able to get your conventional financing,
Right.
then that cost starts to add up. And you're not paying down your debt.
How are we with time?
Like I'm good.
Yeah, because we'll keep
We're still
going.
good.
Okay.
I have mentioned 2 more things that I just thought of while you were talking. Like, this is a little sad, right? So let's try to make it a little happy. We hope the foreign buyer ban will be lifted one day soon. If it gets lifted, like, a lot of money will start pouring in, and these values will go up. I don't know for how long, and I don't know if it'll just be a blip, and I don't know if there'll be a correction, but so if you're like able to ride it out and you know that the foreign buyer ban should be removed at some point, then all this money, because I have clients from all around the world. I was, every day I was up 24/7 just dealing with clients from all around the world. It's pretty awesome. But lately I only talk to people from, Canada. Local people. They're great. I love them.
Yeah.
But-
So question for
yeah.
you, are there any ways to get around that foreign buyers? Now we call it the prohibition, it's the Canadian prohibition. It has been extended for all our viewers. It's been extended by 2 years, and I think it's being lifted apparently January 2027. So that's just it's
A year
less than a year
away.
away. Less than a year
Yes.
away. And but in the interim, can you speak to any way around it? I know it applies to residential. This is not for commercial.
Right, we're talking
And
about
it's only
residential
1 to
today.
3
Yeah.
units. If it's over 3 units, it's exempt.
Yeah, for smaller units, we haven't found a way either even through corporations, you can't do it because, and I'm going to talk about corporations next, but even through a corporation, if there shows you ownership that's outside of Canada, there's a certain percentage, and you cannot do it. So we haven't found any way to bring in foreign buyer money. So it's just waiting. It's like really waiting. A lot of money wants to come in, and money's cheap here. So people, when they call me and they buy a condo for $800,000, like, oh my God, that's so cheap. I'm like, really? Okay. But to them, it's so cheap.
Yeah.
To us, $800,000 is a lot for a condo.
Yeah.
So everything's relative. So that we're going to pray for that. But that's about a year away. So if you could hold it that long, then maybe you can sell it, in a year when if they lift the foreign buyer ban. It's an
And that's a federal issue.
That's a
Yeah.
federal.
And it's something that we don't have.
The issue is that the government, one of the biggest talking points in the government right now is affordability. They would like for real estate to be
No.
Yeah.
back to
Okay,
2000.
crash.
They did have it. They wanted to be at 2004
Yeah.
or whatever. They
Yeah.
since rejigged it. I think it's like 2000. They have to be at 2011, 2012. Well, guess what? We're not anywhere close to that yet.
Yeah.
So I don't know if the government's going to be that
Yeah.
willing to get rid of that for it, because that will drive prices up, which is one thing that the government doesn't want.
I know.
But look how many industries are attached to our real estate law.
I'm not disagreeing with you,
Lenders,
but I'm not the government.
Contractors, painters.
Our
everyone's
economy-
suffering. Advertising, printing. We're all linked. It's 30% of our
The economy of this country is driven by real estate.
Yeah.
Yes.
It really
it's
is.
suffering
From the
because
building side to the real estate to people making money, like
Restaurants. We take
like-
I mean, it's all connected.
it's driven by real estate, and
everyone's
unfortunately, in the prior government, they didn't just implement one thing. They implemented, they had when rates were low, they wanted to keep down prices, so they had the litmus test where you had to add 2 to 3% to the current mortgage rate to see whether or not you could qualify. Then they did the foreign buyer tax, and then there was one other thing it's slipping my mind right now, but there were like 3 things that they did all at once, and it really just ground the real estate industry to a halt.
Yeah.
And so I don't know whether or not, even if you lift 1 or 2 of those things, they also right now the government has to start realizing the HST rebate that they give you on a condo is based on price. Like, they max it at $24,000 per unit. Well, the HST on $1 million condo, that $24,000 just barely makes a dent. They have to start making the rebates on today's pricing. There's a lot of different things, but I don't want to get off the topic of what we're here today. But that's financing side of things. There are limited options. You have to be careful of the expense when you're looking at the private. Try to work with your developer for DTB. David touched on all the different things that you could try. We don't know which ones will work. Some will, some won't. Sometimes you might have to close. But you just got to try every app.
Yeah, don't just give up. Some people just give up and don't even try anything, which you should try. One thing I get a lot of questions about is corporation. Like, hey, I bought it in the name of a corporation, so am I okay? Like, can I just declare bankruptcy for my corporation? Maybe they just formed a corporation just to buy the property. So that's what corporations were invented for. Like, back in the day, you would start corporations, you'd raise money from banks, and hopefully you'd do really well. Or if not, you just declare bankruptcy.
No
It was
liability,
so awesome.
no personal
It was awesome,
liability.
and I wasn't part of that. I wasn't part of that. I grew up just after that. But a lot of my clients were coming out of that. Now, and I just want to say, every agreement, when you sign up in the name of a corporation, the builder will force you to put your name down too. So it's, blah, 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 incorporated, and David Fell. It's 2 people. Why? Because they don't care if the corporation goes bankrupt. They're going to go after David Fell. But I have some clients where they did just go on as a corporation, and then they called me and they said, hey, now, can I just declare bankruptcy? Like, that's an exciting thing. And unfortunately, if you read carefully these agreements, and I would read each agreement separately, but most agreements say, if you sign in the name of a corporation, then the name of the person who signed, that person is equally responsible for the whole agreement. So they do put that in there.
And it's enforceable.
And it's enforceable probably. We'll see.
Yeah.
Because they'll say, no, I signed in the name of the corporation. It's like, yeah, but you signed here too, and you initialed this page too. And so that's what's popping up.
The builders, they pull that shtick the other direction, where every unit they sell you, they put under another corporation.
Exactly.
Right? They could get.
They can do whatever they want. They write that in
the
every agreement. They said, although we're selling it to you today as Company A, at the end of the day, it might be Company C that sells it to you, and there's nothing you can do because we can assign this as many times down as we want.
Now, we do have a couple of questions, and we're going to open up the floor to you guys. And I know that some of you had submitted some questions prior beforehand, David. I know you addressed some, but let's go through some of the ones. And for those who would like, if you wanted to raise your hand. Now, Alexandra, do we have some questions?
Yeah, we have a lot of questions.
We have a lot of questions. Oh
We're
my.
going to be answering the chat question first.
While
Okay,
you're
so
fielding the questions, I just wanted to point out that we're sitting in the boardroom at Firm Capital at the moment, and I really want to thank them. Before everyone leaves, this is all brought to us thanks to Firm Capital, Ellie Dadouche, and we're really grateful for this opportunity. I also wanted to ask if our audiences know where to contact
Everything's
Ferris
in
and
the...
David, and just to make sure that they could find you, whoever's watching on, let's say, my own feed, my Instagram feed, want to make sure that they could contact you directly.
So you guys, those who have received a calendar invite have the contact information, whether it be their website, email, personal cell phone numbers. It's all there in the description of the calendar. Secondly, I have sent on over to everyone the pre-construction default survival guide, which goes through briefly the top 10 questions that people are asking. If you look at the very last page, you will find all of our information there. So I would really like to get on over to some of the questions. So, I guess Nissan, you see.
So Umar is our first question.
Okay, Umar's are Nissan, why don't you read it out? Would you be able to read out Umar's?
I could read that far. I am pre-approved for the mortgage and valuation of property is still not an issue. I never intended to close. Intention was always to assign, as I don't see myself long-term in Canada. Now with current situation, I'm planning to default. I just have RRSPs and TFSAs, no other assets.
So I get that call a lot. And then a lot of my clients are not in Canada and are never coming back to Canada. So if you're really never, ever, ever going to come back to Canada at all, and your kids and whatever, then you might, I'm not giving you legal advice here, talk to a lawyer, but you might consider not closing and just disappearing altogether, because you're never coming back here. So.
But it's also not they don't have to worry about coming to the border and being arrested. It would just be you could never get financing or you couldn't do all these other things.
Yeah.
You're
done here.
You can come back to Canada, you just don't ever expect to come back and get any kind of financing.
Exactly.
You will never see maple syrup for the rest of your life.
Which is terrible. But so...
I have a question.
Oh.
Yeah, I entered into an APS on 2021 and the outside closing date was December 30th, 2025. Next day, I myself sent an email to the builder and to their lawyer by terminating the agreement. And the lawyer responded that we are planning to extend another 2 years. Are you willing to sign the agreement for the amendment? I refused to sign any amendment. And after that, they are not responding to my continuous emails.
Okay.
And I already paid 150. The purchase value is 1.2 million. It is a detached home. And what is the remedy at this point?
Did you send that yourself or through a lawyer?
I sent an email because I terminated the agreement by myself sending an email to the builder as well as their lawyer.
That's very good.
The next day of the outside closing date.
That's very good that you did it. I highly recommend that you get a lawyer right away to write a very demanding letter to the builder to say, hey, listen, please see attached email that our client sent on this date terminating the agreement. You need to terminate the agreement because we're outside the closing date. I understand you offered an extension. However, that extension was not accepted, so let's get on with it. You need a very aggressive lawyer.
And also in that letter, make sure that you put them on notice that they'll be responsible for any costs that you're incurring, because you shouldn't have to write that letter.
Yeah.
Yeah.
Yeah, and I'm planning to hire you actually, that's the situation.
For sure.
And one more thing, they sent me an email just before 3 weeks of the outside closing date for a commitment from a national, this nationalized bank.
Yeah.
The reason is they didn't even start the construction.
Yeah.
Even now, after 4 years, they didn't even start the construction. Even last week I visited, last December also I visited, they didn't even start the construction. And they asked for a commitment 3 weeks before the outside closing date. They already extended 5 times. The outside closing date was December 30. I didn't give the commitment. I went to the bank. Banks told me that we cannot give the commitment. The building is not yet started. The construction is not yet started. There is no even the foundation or anything. You have to take the appraisal. How we can take the appraisal if the building is not started?
Yeah.
What about this situation?
So I can tell you, I bet the builder is asking you for that and everyone for that, so they can fill their folders with, 200 commitments to show the bank hey, look at all these commitments we have. Please give us some money. Maybe they ran out of money. Maybe they're looking for money to finish. So that's why they're asking for it. And every builder is hopping on that bandwagon right now. In that, builders are now asking people randomly for a commitment today, and they're allowed to. It says in the agreement at any time they can ask for a commitment, and they have 10 days.
Refer them to your lawyer. I
Yeah.
mean, that's the bottom line.
But so that's why they ask. But the thing is, you need to get very aggressive with them now and really paper this through lawyers, because it does say in every agreement that it has to come from the lawyers too. So you want to make sure it's lawyer to lawyer in this case. It's very. If you're going to email me, send me all those emails as well, so I can work it into what I
We'll
do.
move to the next. We have
Yeah.
a whole line of questioning here. Grace, you want to read one?
One is the best.
Okay, so actually it's easier for you to read it. 'cause
Okay.
you're facing the direction.
When is the best time to tell/request the builder to walk away and keep the deposit or part of it and sign mutual release?
So Umar, that's a good question. It's different in every case. You know, I'll tell you why. When you say to a builder, I can't close, or your lawyer says our client cannot close, you have to be very specific with the words you use. If I use the word not, they write back right away saying, oh, so you're in anticipatory breach. You have now breached already. Just by saying you can't close, you've breached the contract. We're keeping your deposits. Like, they can get that aggressive. So you really want to talk with your lawyer about your specific situation. But if you know 100% that you cannot close and there's no way in hell that you're going to close it, then yes, we could start talking about getting a dialogue going with the builder sooner rather than later so that they can mitigate their damages. However, some people would say you would wait, as we said, kick the can down the road, because you might want to see how far you can go if you feel that you might be able to close it for less, or there's some kind of thing you can do. But if you're 5,000% sure you can't close, I'd say we start now on working on the solutions versus just waiting to the bitter end.
There was another question that I saw, I glanced at the screen, and it had to do with a woman who, she made a purchase and she's afraid that she's going in default. Can the builder put a lien against her home, she's asking, her primary residence?
Well, if they sue you and they win, then they can get a judgment against you, and then they can start registering things against the property.
Okay.
So there is steps that take a while, but it can start to affect you, and it can start to affect even your credit rating at that point as well.
So your primary residence is not protected.
It isn't.
And if say you were, and even if you're married, you have a spouse, and there are two names on that property.
Yeah, it's matrimonial home, yes, but that's your asset. It's not protected.
And now, speaking of protection, now I know we do have quite a few realtors on this, and I've got some really good questions. One is that, well, of course, a lot of realtors also had purchased, right? A lot of the builders had really encouraged the platinum agents in order to sell. They'll give them a unit to buy, and a lot of these realtors have personal real estate corporations. So one interesting question I got was, well, can the PREC can they go after their personal real estate corporation as well if it's only in their personal name when they have purchased a
But when they purchased, who is the name on the agreement, right? It's usually going to be their name as well.
It will be their name. So would they
Exactly.
be able to go after both the personal real estate corporation and
Yeah.
So once you get a judgment, you can go out any asset.
even if it's a corporation?
Yeah. Any equity you have in a corporation, like if you have shares, we can go after your ownership interest in a corporation, we can go after it.
Speaking of realtors, I was posed with a question where a realtor sold 7 units in a project, purchased one for himself, is in default. Can they hold the commissions that are owed upon closing against that realtor? Or is the commission agreement solely with the brokerage and they're stuck, the builder's stuck paying the 7 commissions out even though there's pending litigation against the agent?
I didn't see how it's written, but if it's individual, then they have to treat it individually. Like they would have to pay those commissions to that person and then deal with it separately.
To the brokerage, the
Yeah.
brokerage then passes it on to the prec agent.
Yeah.
We-
Now, they can play hardball and say, well, we're
Yeah.
not. It's
Right.
just, we're not. And see,
Right.
sue me, see what happens, right?
Yeah.
They can say that.
Yeah.
I did see one question that I just flashed by was, you know, in that where you swap deposits to another unit in the building, someone said, could it be to a different building that the builder's doing? And yeah, you can ask. It's harder because then the money has to come out of one ledger and go into a different ledger at a different building, and it's harder. But yeah, you can make that request and say, hey, I want to close in another unit, in another building of yours at fair market value, and I want you to use that deposit over there. It's harder to get those, but it's something you can request, yes.
Okay.
Here's another question
Another one.
from Sumant.
How is the recovery done? If a builder sues and gets a judgment against you, how is the recovery done? So I don't do much litigation, so I usually refer it off to a litigator at that point, but once they have a judgment against you, they can garnish get your wages garnished and different things like that. So it gets really ugly after they get a judgment
Or
against
put a lien.
Or they get
against-
registrations on any of your assets so that you can't
Yeah.
sell, finance.
They can really mess with
Right.
you
Yeah.
if they want to.
Are there any lending questions that are specific to?
We're just going through the chat first, then we're
Yeah.
gonna move into the Q&A.
Okay.
Yeah, just 1 second. Okay, Khalid already asked this. Okay.
I have a question.
There's another.
Go ahead.
Okay.
I have a question to ask.
Go ahead.
Oh, go ahead.
Actually, I had booked a condo, and it's coming for the occupancy in April of 2026. But and I had booked it in 2022. Things have changed a lot since 22 to now. I mean, I have retired. My wife is out of job now, so it's not possible to close it. It was for $700,000 in Burlington. I have paid $106,000 already on it. Now I have to get out of it. So either I will be defaulting on it, or because I'm sure I'm not going to get a mortgage from anywhere, and paying 6% or 7% is not possible for me. One of my cousin has said that he can take up my condo and he can go from there. So how does this thing changes from my name to his name?
Transfer.
Yeah, that's called an assignment, and you know you gotta get a lawyer right away, and then the assignment, the lawyer will help you to assign it from you. Did you say your cousin? I think to your cousin, and it goes through all the lawyers, and that's very doable.
Yeah.
I have that all the time. I have
Especially
that all the
close
time.
relatives.
Yeah, like
there's
when it's a relative,
they don't
they'll
know.
always say yes.
Yeah.
They'll charge a little something. There's fees and stuff. I
Yeah.
charge a little something, but it gets
Yeah.
done. These are things that can get done.
Yeah, and again, we urge all our listeners that don't wait to the last minute. I mean, sir, you mentioned that this deal's closing in April. That's just right around the corner. Get that lawyer. Call David tomorrow.
Yeah, like these are
And
quick.
let's
We gotta get
this.
going. Yeah.
Don't waste any time. Don't procrastinate. Procrastination leads to failure. What was that? Ellie's line?
Yeah.
Okay.
So.
Any other interesting questions that?
Haven't been done with.
There's one from Alex.
Okay.
Do you want to see it?
Are builders, I'll just read it, I guess.
Yeah.
Are builders generally willing to amend the names on the APS to include a person that is needed? Can this be done without
Or
penalty?
co-signing.
Yeah, generally these days you'll get a builder to allow you to add a name on title. If it's family member, very easy. If it's a third party, they will do it. There might be some small fees that they charge.
But they're
but
desperate to close.
But they want to close,
Yeah, they
and,
wanna
and we
close.
make that argument
Yeah.
very strongly. And
Yeah.
we even talk about mitigating damages right there. We say,
Right.
you need to allow this
Right.
in order to mitigate
In
damages.
today's environment, there's not a builder out there that's going to say
Yeah.
no.
Yeah, they'll say yes.
Yeah,
Yeah.
we must be creative and come together and make it work.
Yep.
Sheila asked if the new signees ask you for today's market value, will the builder entertain that?
So if the new assignee, so it means, let's say
Assignee.
you're buying from a builder, you're an assignor, and then you find an assignee to buy it from you, and they're asking for today's market price, it's not the builder that will entertain it, but it is the seller to you that can entertain it. in that they have to pay the difference to the builder. So just to give you an example, let's say you're someone who's buying from a builder for $1 million, and fair market value today is 800, so you want it for 800, so they sell it to you for 800, yes. But that $200,000 difference, the builder's not eating 1 penny of it. The seller to you has to pay the difference.
So if your deposit is 150, the builder's gonna keep your deposit, and you're gonna have to cough up another 50,000.
Correct.
To close.
And I have that all the time. So I have sellers giving me money.
Yeah.
It's actually
To
not
sell.
a bad situation.
Yeah.
It's not the end of the
It's not
world.
the end of the world, but it's what you're talking, that's the signing out a loss that you discussed that earlier.
That's my loss, exactly.
So who determines the value? I mean, let's say
The
you
buyer always determines the
The
value.
buyer, it's not like you can't, there's no billboard or, like
Yeah.
there's the VBS board
Oh,
where it's
back
like,
in the day.
well,
Yeah.
back in the, like the developer was like, oh, I have so many units left. We think this project is now worth, 1,100 a square foot. Where do you don't hire an appraiser.
No, but there are
Yeah.
different than it was 15 years ago. In the last 5 or 6 years, there are websites that you can go to, and it's free. It doesn't cost you anything, and you can sign in, create a login, and you can go and see what is sold in that building, or what is closed, or in the neighboring building, or wherever in the neighborhood, and it'll get you a good gauge as to condos for the most part sell on a per square foot basis. So right now, a new condo that was $1,200 a square foot, maybe today's $900 a square foot. You can see that on the website. It'll tell you, you can go in and you can click, it'll show you active listings, so it'll show you anything that's listed in that building or in the area, and you can see what people are asking. But the better, I look at what's closed in the last 90 days or 180 days.
And how do you
whatever it is.
ascertain that
Yeah.
if it's not on MLS, it's pre-construction, so how do you know
Well,
what's closed in the past?
Once the units start closing, you
Yeah.
can see if there's been like a resale. You can see what's sold in the area.
Yeah.
But prior to the closing,
Yeah.
you're gonna have to lean on what's sold in the area.
Okay.
And if it's new or whatever, it's not an exact science, but it can give you kind of a ballpark of where the values are.
And also look at what that builder is selling their current units for.
Right.
And it's like, that's the number.
What they call.
But usually they won't.
They're advertising, but they are advertising it.
She has
because
a
they're trying to
follow-up
sell it.
question too. She wrote,
Oh,
my brother
yes.
is willing to come on the contract, but as a corporation, because right now we don't have a good credit score. Is
Yes.
this an option?
Yeah, Sheila, you can ask the builder to add a corporation to title. They will ask for a lot of information about that corporation, so they're gonna drill deep, but they'll allow it, because they really wanna close. You need a good lawyer to convince them that the only way to close it is by adding this corporation. You'd be crazy not to allow it, so freaking allow it.
The main thing today for any developer is just close the unit. They
Yeah.
want to close, and they are being more
Yeah.
flexible now than they've ever been in the last 20 years.
Yeah.
They need, not just want, they need to
Yeah.
close their units at the price that they
Yeah.
sold it at.
Right.
Because they don't want to also, the issue with them selling or listing at different prices, you're going to reset the value of the units in your building.
Right.
So that's why they don't really like to try to close and sell their units until they've gotten rid of all the ones that have already bought.
Yeah.
And then they'll go back and start actively, aggressively trying to sell. Because there's one instance that I know of, not condo, but a low-rise new house in the 905. The buyer came to the builder and said, I've given you, my purchase price is $1.5 million. I've given you a $200,000 deposit. You can keep my deposit, but just don't sue me. And the builder took a tough stance and said, no, you have to. So the builder went and closed, but the market was roughly at $1.3 million or $1.2 million.
Okay.
The guy was able to close. He closed and immediately sold it for $1.3 million, and that reset the value
Right.
at $1.3 million. So now all the purchasers that haven't closed yet are having a hard time financing, because now that house, the exact house that you're buying, is now, you bought it for $1.3 million, but somebody next door sold it for $1 million, or bought it for $1.5 million. Person next door sold
So
it for
you
$1.3 million.
coopered the other.
And it really
neighbor.
hurt the developer.
Yeah.
So they
Yeah.
don't want to reset the values of their own building.
Okay. Back to that last question that David, that you've answered. What was her name? The lovely lady that I can't remember her name.
I think it's Sheila.
Sheila. I've seen in the past many developer APS forms that have a corporation assigning corporation clause built into the original APS. Have you ever seen that, David?
Well, I was looking, I was just.
Oh, okay, so I've seen when new construction, you pick up the package, and I've seen clauses from some of the developers that say, yes, you can assign to a corporation, or a good lawyer, and usually I recommend my clients work with a lawyer immediately when we're doing pre-construction. We'll make sure that clause is added into the
we always do.
so that you don't have to worry about it 3-4 years down the road.
We always do.
And they usually allow for it.
Yes, we do that on all of our deals. We ask every builder always to allow a name corporation. We allow for leasing. We ask actually 10 things, so we just make sure that we get everything for our clients in the 10-day cooling off period in that early time.
Right, exactly.
But then if it's a little later, a little harder, but we work on it. Yes.
Okay.
Yeah.
We have time for,
Okay.
did anybody else
We still
want
have work questions. We're gonna move on to the Q&A section now. That
Well,
was
let's
just from
move
the
on to
chat.
Q&A section.
Okay, perfect. Okay. Okay, Kate wants to know, do you suggest we look at how much debt the builder has on the project so we know how desperate they may be to make a deal? If they have a second mortgage or non-bank lenders with double-digit rates, they're likely to compromise sooner, right?
It's a good question. The answer is we can't see how much debt they have. Even if I did a search, it'll show some major mortgages on the property, but it doesn't really show how much they still owe or what it is. And the registration amount of mortgages doesn't actually tell you how much they borrow.
No.
So there's no
Sorry to
information.
change.
So it's totally confidential, and there's no way for me to grab that information. But it's very smart. You should Google them, because sometimes there's a news story about someone going under or something like that, and that might change the position of the builder.
If the one thing that I would say about that is, if you can see on the chart, if the first mortgage is from not a conventional financing source, it does mean that their cost of financing is higher. A lot of people hide in the, banks will put in their charts that the rate's 18% anyway, they don't put the actual rates, so you won't know. But the actual lender itself, like I said, when there's tiers, if it's not a bank, and it gets to a trust company, that's going to be a little bit more expensive. And then when it gets down, when it gets to non-bank lending, the cost is higher. So you won't know what the actual cost is. You'll just know it's a little bit higher.
Exactly right. So long story short, no, very hard to know what the builder owes. No way to get that information. They're holding that close to their chest.
One other thing too, I might say, if there are multiple mortgages, that is a sign that there's a struggle.
Yeah. There's a question from Liz. How to ask VTB from builder, ? Or realtor? And I would say it's the lawyer. It's really the lawyer.
Yeah, Liz,
that should
point,
deal with it at this point.
Yeah, at this point it's getting a little bit ugly, so you want to get a lawyer involved.
Yeah.
To help you there.
Okay, next question.
You want another question?
Yeah,
How many
so
questions do we have time for?
We still have more time.
Okay. Are builders generally willing to amend the names on the APS to include a person that is needed as a co-sign to secure financing and?
We've answered.
Yeah, we've
We've
done
already
that.
dealt
In
with
today's
that.
environment, that's a yes.
That's,
They'll be
yes.
Let's find out. There are so many questions field that are coming through.
We're just going in order.
Let's go to
Okay, here we go.
General
Let's put it
Electric.
on one.
GE. Could the law regulating the APS agreement of purchase and sale be challenged and new precedent case law created due to massive future litigation with pre-cons? Could the outcome be that the APS is deemed void due to unconscionability of the process where one party, builder, has stronger bargaining power, and the judgment issued against a defendant is shocking to the conscious? Builder damages are the cost of selling. This is all in brackets. The builder is also keeping a deposit, therefore the builder is recouping all his money in this current market situation. I think it's just mitigating.
It's tough to say that this agreement is void. The argument is when everything went up, back in the day when we would spend $500,000 on a unit and sell it for $700,000, Could the builder have argued that they should take half the profit? And we would have said, no way, that profit's ours. So similarly, as it goes down, the builder, like you signed a contract, you have to close on it.
Yeah.
And that's what it's saying. So the contract itself is not unconscionable, believe it or not.
Yeah.
It's a well-written contract in favor of the builder, I'll give you that.
Yeah.
But it was conscionable at the time.
Yeah.
It's not like the builders are evil people who knew this was gonna happen.
Right.
They really believed, like all of us, that the market would keep going up. There's some people who knew it was gonna.
And we don't have a crystal ball, and any realtor that looks you in the face and says, sign here, this 1,100 square foot project is going to be worth 1,500 in 5 years' time. I mean, don't believe them. You are taking a risk. Any investment you make.
Yeah, unfortunately there's a whole generation, if not two, of people that only saw the market go like this.
Yeah.
And so it's kind of a foreign thing I've been at this for 28
Yes.
years, other than in 2009, 2008, 2009.
2008,
And in Canada, there wasn't even a crash, it was just a pause.
Yeah.
The crash happened in September, I was away on vacation in September, and it took till about March the following year, and it wasn't that really prices changed, it just kind of, nobody did anything. And then everybody kind of woke up in the spring and said, you know what, I still have my job, I'm in Canada, I still have my job.
But you
So
don't
you
remember the 80s when you had 18%
And that's
interest.
but I'm saying, I've been at it for 28 years, and I came in just after I came in 97, I started here in 97, and since that time, it's just gone maybe like this, but it's been going up all the time, and this is the first time that multiple generations really have seen this side of the spectrum, and it's a bit shocking.
And there were many forces. We didn't see COVID coming our way. We didn't see, this issue with, the United States, Canada tariffs and that problem. I mean, there's so many converging.
There's been a lot of unconventional forces at work.
Exactly.
Next question, another question?
Yes. Given this unique situation with the market, is the government planning to pitch in to bring in some relief to the buyers in the market with this pre-con deal? Because honestly, this is an unprecedented situation and the blame can go either way. So keeping that nuance aside, do we have any insight into what the government is trying to do? Helping, that's very, I'm joking, Sam, it's from Samson, very socialistic dream. It's a dream. I don't think we're going to get a bailout, personally, but
They have done some small tweaks
to
your CMHC rules, increasing the amount that now qualifies for CMHC so you can get cheaper financing.
Yeah.
But for the most part, I would not expect any kind of massive.
Like they're just gonna
Some
charge the
rebates,
taxpayer.
as I understand the pre-construction, no? Or
Well, it's all tied in, like your HS. They're talking about increasing rebate, HST rebate. The unfortunate part of that is the buyer doesn't see the HST rebate.
right.
It goes to the developer.
Right.
Yep.
Okay, so we have time for one more or
Couple more.
I'll just add one thing. I saw that my name and contact's going up. If you want to add me on Instagram or TikTok, it's at David the Feld. Yeah, you can just type it there. So add me there. That way you can just follow me and ask questions. David the Feld. No period. David THE FELD.
Yep.
Enter. That's it. So you can just follow me there and ask questions anytime on TikTok or Instagram or whatever.
There's only one David Feld. It's David the Feld, and that's it. Don't
Okay. Something, another different, give it, okay, so we have some
We
ADS.
answered that one, okay.
Amend names, okay.
Some questions are
like a
duplicates.
Does
They're just
anybody-
repeat because you're all smart. You all have the same idea.
And some of them are similar.
We'll go back into the chat.
Okay, and I know that we see some information, like questions from the chat as well.
From Billy.
If a major project like One Bloor had gone into bankruptcy before completion, And this is one bloor west, not one bloor east, that
So
is...
the one.
What happens to deposit?
Okay, so here's what happens in that case.
Okay.
Your deposit is insured. On all condo projects, if it's either your deposit is in trust, or if it's taken out of the trust to use in the project cost, which is a very common thing, it's insured. There's various different insurance companies, Westmount, St. Paul's, there's different insurance companies, but your deposit is insured. So even if the project goes bankrupt, the insurance company, and they cancel the project, and your deposit is safe, it should either be in trust, or you'll get a check from the insurance company.
And it's the developer has it in trust with their law firm usually.
Usually it's not in trust anymore, like on the bigger projects, like on the one bloor for sure, I know that there's hundreds of millions of dollars of deposits that have been, the way a developer pays for the construction is they get a loan, they put in their own equity, and there's a gap in the middle. It's usually what they do is they say, okay, we're gonna have $100 million in sales, we're gonna have $15 million in deposits, and then they go get an insurance policy that allows them to take that 15 million and use it towards project costs. But as the buyer, you're protected because the insurance company has insured those deposits. They're only released from trust in a condo situation when they're insured.
So I've seen predominantly the purchaser is going to write a check or a draft out to the lawyer that
It goes to the lawyer, and
it always ends up there.
there's a trust account set up. There's a deposit trust account set up for each project.
Right.
And the lawyer is in charge of that, and the only way that they will let that money go out of the account is if there's a facility in place, an insurance policy in place
Okay.
that allows the release.
I mean, that's good news.
That's good it's been good for condo.
Yeah.
Freehold is a whole other problem,
Right.
but we don't.
Yeah, maybe we'll do another one of
So
these.
just to answer that, yes, if the in general, if it's a condo and the builder goes bankrupt, you'll get your money back with interest. It just takes a little while.
Yeah.
Now, Alexandra, do you see any more questions that might be a little bit different that we can address?
I'm just looking at it right now. Relatively all the same questions. Maybe we should take a moment to ask people to raise their hands, and they can feel free to ask
Yeah,
questions.
so we can take one or two questions. Anybody? Okay, so
And
we got.
any other questions
We
can
have a
be
bunch
sent
of
to
people
David.
raising
Okay, so
their hands.
Ali's been waiting.
Ali, okay,
Yeah,
Ali, looks
Ali,
like you're
please
up there.
turn on your mic.
Yes, Ali
Yes.
speaking.
We could hear
We
you.
can hear you.
I can. Okay, I have a question. If the builder, after that one, they can live in the house, the purchase and bought that one, they can put their lien in the house, they live in that one or not?
This is one where you're saying you defaulted. Can they lien your personal house that you're living in?
Yes.
Only if they get, like if we said before, if they go through the process and they get a judgment against you, then they can start putting registrations on your different assets, including your house.
So yes,
Yes.
Yes.
it's a long process, but it's possible.
Now, who else has their hand raised? I see.
Okay,
Rakesh.
then.
You're
Thank
welcome.
you, Ali.
I see. Number two. Rakesh.
Yeah. So my question is around the moral judgment. So are there any precedents where a judgment has not been granted to the builder? Because as we have already noted, the APS is very heavily skewed in favor of the builder, and a lot of people have explored and exhausted all the options, like assignment is not possible, price negotiation is not possible, people might not have the resource to pay the damages. So is there any final recourse to minimize the damage, or any precedents where we can plead that we cannot come up with the damage?
There's not really, but you have to use those 5 things. I don't know if you were there at the very beginning, but I mentioned about 5 or 6 things you can try with the builder. So if you're finding yourself in that situation, you want to try some of these solutions that we suggested earlier.
But there's no way
Exhausted all
to,
of them.
if you've exhausted all of them and the developer is still proceeding with going with a judgment, you have to defend the judgment, obviously, but there's no magic pill that can make that stop.
I think David could add to this question. in litigation, I'm assuming the builder has to mitigate their loss as well. The builder's
100%.
going to have to promote that condo
Yep.
and try and get market value for it.
That's right.
So if your condo's worth $1 million, they can't dump it for $400K and sue you for the difference, for the shortfall. They have to prove that they've,
Reasonably.
Exactly.
Yeah.
So that's just something else that I think, is important to know, that it's they're not suing you for the amount. They have their job, and their job is to try and sell it.
And so we have a couple more questions on hands.
Nancy?
Yeah.
Nancy, please unmute your mic.
Nancy.
Hi, I have a quick question. Can you declare bankruptcy or debt resolvency or something to protect your asset? And my second question is, what happens to the commission that the realtor gets when the purchaser defaults?
Good. So I'm not a bankruptcy expert, okay, but if you're feeling that you're going down to the wire, you're not gonna be able to close, and you might want to discuss with someone a consumer proposal for bankruptcy, okay? And but I'm not an expert at when you should declare bankruptcy. But the thing is, I just don't know. I can't say when it's a good time to declare bankruptcy.
The only thing about a bankruptcy is the bankruptcy, the trustee in bankruptcy has the ability to sell your assets to pay your creditors. So there's a bit of a I know that they have a bit of a formula so that you can continue a certain quality of life and they have roof over your head and all that kind of things. But if you have assets, the trustee in bankruptcy has the ability to sell them.
In this case, you would refer Nancy to speak with a trustee of bankruptcy or a lawyer that deals with bankruptcy. What's the right referral in this matter?
I feel like a trustee in bankruptcy, but if that didn't work, I would look for others. I don't have one on hand right now. I'd have to look for you.
Okay.
Yeah.
Ken Tessis is one. We
The
have
second
one.
part of the question was the realtor. We were discussing this earlier.
Right, we talked about this earlier.
So, if a lot of realtors, when they sign with the builder, it says, we'll pay you, sure, but if the purchaser doesn't close, we're going to claw back that money. We want it back. So, some agents have asked, should I be spending the money, go buy a yacht with all my profit? No, you should probably keep that in a separate account and not touch it for a while if you're making money from new construction, if you believe any of those purchases are not going to close, because you may get an email asking for that money back. It might not be your money.
But for just to add to Nancy's question here, and our audience, I don't know if they're aware that us as realtors, we usually receive our commissions in pre-construction over time. So we'll get 1% of the commission, say, within 120 days of the agreement being signed. Then on the second or third year anniversary, they may throw another % our way, and then the final 3% may get paid out upon closing. So in your situation, your realtor, may have pocketed, 20K, but they're not in receipt of the full commission. They may have just partial commission.
So we have time for 3 more questions. So, okay,
Yeah.
so next one.
Okay. Sheila?
Hi.
Hi, Sheila.
I'm few with the that you've answered, and thank you for your question.
We're having a hard time hearing you.
What about? Hello, can you hear me?
Yes, we can hear you now.
What about consumer proposal? You told about the bankruptcy, and what about consumer proposal? Because we two different things.
Consumer proposal, you said?
Instead of bankruptcy, yeah.
Yeah, I'm not.
Yeah.
I feel like you need to get advice from a trustee in bankruptcy.
The consumer proposal would be the first thing you try. You wouldn't go straight to bankruptcy. And if your creditors don't allow you to, they don't accept the proposal, then you may have to go into bankruptcy. But you wouldn't do the bankruptcy first.
Thank you.
Okay.
And Rakesh?
All right, Rakesh, unmute your mic.
Hello.
Hello?
What about consumer proposal? You told about the bankruptcy, and what about consumer proposal? Because we two different things.
All right, Rakesh,
Hi, good evening.
Good evening.
I thought you called my name. So yeah, one was like when I bought the condo, at that time the prices were high and everybody knows that the prices are like on the lower side and we're not getting the same appraisal. But if we are able to close the deal, at the time I didn't buy the parking and locker, would it be possible to negotiate with the builder that if they can add, because like it is possible as of this moment, lots of buyers are going that out. Can they add parking and locker or some incentives if we close that deal on the sale price?
We can always try for you. You know what the scary part is? If we ask that, then the builder knows you can close, so they can just say, no, just close. They literally don't have to say yes. Do you know what I'm saying? Because that's a hint that you have enough money to close. So if I'm the builder, I'm like, I'll just say no. But you can ask, like you could say, hey, listen, we know what's going on. We know what's going on with the building. We know there's a lot of problems closing. Our client is one of the good ones. Our client is someone who wants to close. Our client is ready, willing, and able to close. The only thing is, we are looking for an additional parking spot. But I'll tell you, a parking spot these days, 50, 60, 70,000. I don't think they're throwing those in for you.
In Yorkville, maybe up to 300,000.
Oh yeah, 300,000. Yeah.
Grace, this is a good question for you. Billy asked.
Okay.
So I feel like it's wishful thinking, but I'm always here to help with the wishes, and I put them into writing. We try things for our clients. You never know. You don't know if you don't ask, you'll never receive.
That's
right?
for sure.
Yeah, I know. We'd also like there's Billy. Which one? Billy So.
Yeah.
Actually, Billy's been asking a couple questions, so let's unmute your mic, Billy. I know we've had a conversation before, and I know we've answered some of your questions. Would you be able to unmute your mic?
Oh, I'm here.
Hi, Billy.
Hi.
My question is a construction by default, and the units are already rented and with prepaid rent. Who is going to be responsible for the tenant? The builder probably will say the tenant is trespassed in the unit because the buyer is even closed.
I'll just let me explain the question to people. It's a good question and it's rare, but I have it going on some of my files right now. So the question is, hey, listen, I'm buying from a builder. And of course it's an investment, so I put a tenant in there during occupancy. Now my tenant's living there. He signed a 1-year lease with me on an OREA form, which is very legitimate, and they have all the rights of a tenant, and I have the few rights of a landlord. But then you stop paying your interim occupancy fees to the builder, and the builder says to you, you're in default, you gotta get out right now, and they're allowed to say that. And now we want your tenant to leave, okay, right now. But your tenant is an innocent person who entered into a contract in good faith. They have no clue about your financial problems. They moved in with their wife and 2 kids and the dog, and they're not moving anywhere. They're gonna want to sue you because they have rights. So, what you're supposed to do, and many people don't do this, is when you sign that lease with your tenant, you're supposed to add an addendum that says, just so you know, this is an occupancy closing, and if for any reason it ends, you'll have to leave. It wouldn't even work for you if you got them to sign that anyway, because they do have rights, but it would be good if you put them on oath. A lot of builders require you to add that to the lease, and a lot of people don't add it to the lease. Okay, so that's one thing. So be careful what you must add to the lease. It's actually a requirement in many cases that you add an addendum to the lease explaining the situation. Now, but you're right, long story short, the builder kicks you out, and now they want to kick the tenant out. They can't. The tenant can sue everyone, and the
tenant has lots of rights under landlord's tenant. It's not easy to get that tenant out, even for the builder will not have an easy time getting them out either.
That's right.
And presumably they've used the Ontario form.
Yeah, OREA form.
The OREA
Yeah, that's what I'm saying. Like, it's a legit lease, and they have very many rights. And you, as the landlord who just got kicked out, have very few.
And the tenant tribunal is backed up for months.
Yeah.
So it's very hard to get the tenant out.
And builders know this.
I have another.
Yeah, go ahead.
Yes.
In this case, does the agent have any responsibility?
Good question.
The agent checked that before they enter in the lease, right?
You know what? It's not. I would say it's a tough one because it's not your agent's job really to read the 60-page agreement, right? So it's important to maybe ask your lawyer, hey, I want to lease this out. Is there anything in the agreement that I have to know about when I want to lease this out? Do I have to add anything? Is there anything I should tell my agent? It'd be hard to find your agent at fault there. You could try, but it'd be hard.
Unless he or she made representations, promises, or false promises to you.
Yeah, then of course.
Then the broker's in trouble.
Hope that answers your question.
So we are, we have one last question.
Okay.
Fariba?
Fariba.
Hi, and thank you so much for all the information. It was very, very useful. I really appreciate it. My question is, I bought a condo for my son and my niece, and it's their name on the purchase, and they are both a student. We were thinking we can help them when the time comes, but unfortunately, I'm sure we cannot do it because the price is very low. I know we cannot get the mortgage and we cannot pay the difference. My question is, we have an occupancy in June. Should we start to talk to the builder and see what we can do, or we have to wait until closing date?
So I was saying earlier, I'm not sure when you joined, but if you're 1,000% sure you can't close, like there's no way, then you might want to start those conversations now to see what solutions there are. Like maybe you could try to assign those at a loss. Maybe you should try to assign them at a loss now. You might have some time to do that. So it's always good to get a lawyer's advice. Every file is different, every client is different, but if you're 1,000,000% sure that you cannot close under any circumstance, then you might want to start that conversation now so they can start to mitigate their damages now. So you can try to find a way to assign it now, things like that.
Thank you so much.
Yeah, and Fariba, just let's hope that the developer is behind in the closing and that June date, maybe an October date, and maybe the market does pick up somewhat, and that could be a silver lining.
Yeah.
Thank you so much. I'm praying every night.
We're praying for you guys. I know, I'm going to tell you this because I have a lot of clients coming every day. I pray for all my clients, I pray for all you guys. It's tough out there. You didn't do anything wrong, so you know it's depressing, it causes anxiety. I'm like half therapist, half lawyer on a daily basis. So I just want to say, like, I really feel for you guys, and I know a lot of people are hurting on this call, and we're here for you. As a group, we're here and we'll help you as best we can.
I'd like to reiterate what David said. Just know that this is not your fault. Okay, this is changes happen completely out of your control. And I know it's stressful and everything, but you can at least know that this is not any way your fault.
All right, so we'll leave it at that.
Thank you.
Yeah.
And to be continued, we will follow up with you guys. We'll send it a replay or some meeting notes for this. And without further ado, have a good night.
Have a good night.
Okay, good night.
Good night, everybody.